Good morning, everybody. Jen Tozser, your portfolio manager here, to talk about something that comes up regularly at this time of year, which is tax loss selling, and should I do any? So let's talk about that for a minute. Tax losses are actually interesting because they carry forward forever, but you can carry them back 3 years. And I can tell you, we lost a little bit of money in 2022, but we made a ton of money in 2021 and 2020, and actually also previous years as well. So there might be some tax that you can recapture for sure today. So that's one reason you might want to consider it. The second thing you're going to want to consider, is it a meaningful amount? I mean, don't bother with $2,000. You do have to refile, and you will always be able to use it in the future. So make sure it's meaningful. But there are some pitfalls to tax loss selling. Every year in December, everybody has their favorites that they sell. And if you've got a favorite that you're selling that's the same favorite as everybody else is selling, you might get a price that's artificially low. And ultimately what happens is somebody else swoops in and says, aha, that's too low right now, and you weren't able to wait out your 30-day period. So what I like to do is I like to take a look at the sensitivity of the stock to say, if I sit out 30 days, what's the probability that it's going to go back up and I'll have wiped out the value of my tax loss? So that's one thing. The second thing is that what if it's a unique stock? What if it's something where it's really the only one? Like an Amazon, for example. There's really no great alternative or substitution. So you're actually completely unexposed now to that area. And even if you're in a loss, you have to really ask yourself what's going to happen for the next period of time. And by the same token, if you just say, I just want to switch, I don't want to own this anymore, I want something that's done really well, make sure that you're not doing the same thing that everybody else is doing. We call that window dressing in our industry, where at the end of the season, before the annual reports are printed, we already know who the best performers were. So all these big mutual fund companies and pension companies sell all their tax loss dogs, and they buy all the ones they should have owned. You just don't know they only bought it last week. So those stocks can actually become overinflated in value. So in summary, yes, there is value in tax loss selling. Take a look, talk to your accountant, talk to your portfolio manager, make sure it makes sense for you. As always, if you have any questions, please give us a call.